Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today I ask myself, is it time for me to sell AT&T? When you follow me, you know my whole portfolio because I give you a weekly insight of that. AT&T is part of this portfolio, and this portfolio have a lot of positions. It's 21 different companies, and in my view, it's too big. I mentioned that quite some time in my videos. I wished it would be a little bit smaller. And so with the end of the year and a little bit time to think about over the holidays, I also questioned, of course, all of my positions. And AT&T seems like a candidate to sell. And in this video, I will try to explain why I think there could be better options in the market than AT&T right now. And of course, as always, at the end of the video, I also give you the weekly insight to my portfolio with all my transactions, received dividends, and performance so far, of course, so you have a very transparent insight to all my transactions. So as I always do, I calculate the intrinsic value of all of the companies I buy or even I analyze. And so here we have a view on the intrinsic value, the current price, and my buy price of all my positions. And we see that AT&T right now almost is on the intrinsic value, on the my calculated intrinsic value. And so there is not a lot of margin of safety right now. And on the other hand, of course, AT&T have also some problems. And so the question for me is there really an upside and what to do with this position, or is it maybe the weakest in my portfolio? When we look at the long-term chart of AT&T, then of course we see that there is almost 20 years of nothing. There's almost no gains. So all of the performance of AT&T come from the dividend. And the dividend right now is very high with 7.25%. And so AT&T, of course, is a great dividend stock, but the performance really just come from the dividend. There's not a lot of gains in the stock price. And the biggest problem with AT&T, and I mentioned this also in my deeper analysis of AT&T, is their long-term debt. They have very high long-term debt of around $150 billion. This is immense, and even if they try to reduce this long-term debt, this is a long road. This will need a lot of patience to reduce this debt, and this is the biggest issue with AT&T by far. And then, of course, they try to reduce this long-term debt, and then the 5G auctions just on the way, and it seems like this is kind of a bidding war, and the price will be much higher than estimated. And then the question is, what can AT&T do here? The bidding already reached the $70 billion mark, and this is double than estimated, and it seems like this is not the end of the road. And so the question for AT&T become, do you really overbid by any price for the very important 5G, or do you don't do this bidding war and just leave the 5G sector, or at least this auction? But this would be also terrible for AT&T because 5G will be the next big thing, and of course it's important to have here a big part of the market. And so the one way or the other, it will be not nice for AT&T, at least not in the short term and the midterm. This is very questionable, and with this high long-term debt they have already, it seems like there is not a lot of breathing room. There's not a lot they can do. And this, of course, is, as they say, devastating. Also with this auction and maybe the overbidding and the new debt they have to take, the question is what happened then to the dividend. And the first thing we saw already is that AT&T skipped the annual dividend raise for the first time since 2005. And these are the first signs that also the dividend is in jeopardy for the future, especially when the 5G price is that high. And so the question really become for me, is it time to sell AT&T? I didn't make a decision yet, but it's very likely I will sell my AT&T stocks in the next days because there is a lot of questions now, and with the long-term debt it was always. And when the performance, the profit just come from the dividend, and even this dividend now is in question or in jeopardy, then I think it's time to think about if there is not better opportunities in the market, and I think they are. And with that, I also want to give you my weekly portfolio insight as every week, and I do this for my real money North American portfolio. And with that, I'm one of the few YouTubers who do that and give you an insight to their real money portfolio. And if you like that and if you find any value in that, please subscribe to my channel, give me a thumbs up. This helps the YouTube algorithm a lot, and follow me on my road as a long-term value investor. And first of all, as every week, I want to start with the received dividends in the last week. And this week, Jack Henry paid me $4.02. Not a lot, but at least a little bit of cash flow to my portfolio. And then I made some transactions last week. The first victim to reduce my positions in my portfolio was PPL Corporation. You find a deeper analysis of PPL here up on the screen, and the reason why I bought into that. I sold them for $26.76 and gained a plus of 1.31%. And the reason I sold PPL is a little bit like with AT&T. PPL is a great dividend payer, a great dividend stock, but I think there are better opportunities in the market. And on the other side, I added another 20 shares of Intel for an average $46.28 to my current position. And why I bought even more shares of Intel and why I think Intel is way undervalued right now, just not loved by the Wall Street right now. You find a deeper analysis and some other videos about Intel on my channel or here also up on the screen. And then I added 2 more shares of Berkshire Hathaway. And also for Berkshire Hathaway, I make a deeper analysis before, and you find this also here up on the screen. And for me, Berkshire Hathaway, even at the current levels, is still a great long-term investment. Maybe the best long-term investment where you can have 8 to 10% profit every year over the long term. And that's great. That's especially great when you see the very low interest rates and the very low rates for the bonds. And the reason why I bought Berkshire and Intel is because they are way undervalued in my view. Berkshire right now 36% undervalued, Intel over 40% undervalued, at least in my mind, in my view. And as I said in my videos, I explain why I think it's like that. And so for me, over the long term, these are great investments, and hopefully this will work out. And now at the time where both of these companies are so undervalued, I just added to my position. And with that, I want to give you an overview to all my positions in my portfolio. And you see here that the best performer so far is the Walt Disney Company with almost 72%, and Caterpillar, Facebook, Legend & Plaid, and so on. This looks really good. Overall, I'm very happy with the performance of this portfolio. And if you're new to my channel, you find a deeper analysis for all of these companies on my channel. Check this out. You will find there the analysis, you will find the calculation of the intrinsic value, the reason why I bought, and I also tell you when I bought and for what price. And with the adding of Berkshire and Intel, the pie of my portfolio looked like this. And of course, the Berkshire and Intel positions right now over 6% of the portfolio. And overall, I still want to reduce, as I said, my positions. Right now, we have 21 positions in this portfolio. The problem for me is a little bit that for the one or the other reason, I like all of these companies. And so it's really hard to decide to sell. But as I said, I guess AT&T will be the next victim to reduce. And on the other side, it's likely that uh, over time I will add more to the undervalued companies I have in my portfolio. In first and second place right now, Berkshire and Intel. And with this North American portfolio, I made an overall performance since the 2nd of December 2019. This was when I started this portfolio, a performance of over 38%, which is an outperformance to the S&P 500 of almost 20%. And this is great for me. The outperformance in the last few days reduced a little bit, got a little bit smaller, but overall, I'm very, very happy with this outperformance, and we will see how this will work out in the long term. Um, my whole goal for this portfolio or for my investments overall is just to find good and great businesses for reasonable prices and then hold for the long term. That's the goal. This is a reason why the intrinsic value is so important to me. I will just try to go this way and I will give you my weekly insight of all my transactions of this portfolio every week. So hopefully you stick with me on this road to financial freedom. That's it for today. Thanks for watching, and if you liked the video, please subscribe to my channel and follow me. And if you really liked the video, please give me a thumbs up. This helped my little channel and the YouTube algorithm so much. Ring the notification bell to never miss another video, and then we will see the next time with the analysis of another stock. See you then. Take care. Bye bye.